Hi, welcome to the first episode of InvestStream US-India. I'm Pankaj.
And I'm Harjit. We will bring you a concise briefing on the public equity, fixed income, venture capital, and technology markets across the US and India.
Just to put some legalese aside first, nothing in this podcast is meant to be investment, financial, or tax advice. Please consult your financial advisor, accountant, or lawyer for advice. We are just discussing our thoughts on what's going on in these markets, and this shouldn't be construed as any sort of advice. That being said, U.S. unemployment held steady at 3.7%, while 155,000 jobs were added in November. This is below the 198,000 new jobs that were expected by economists polled by the Wall Street Journal. Wage growth showed continued strength, maintaining a 3.1% increase from October. This is the best rate since 2009. Wage growth has been a big concern for folks for a long period of time, and it's good to see that we're seeing some consistent wage growth here. Average hourly wages for all private sector jobs increased 6 cents to $27.35 in November. So overall, we're seeing some good signs that the economy is still moving. Wage growth is improving. Of course, we want to make sure that it doesn't spiral out of control and lead to inflation.
Great news on the wages front. We saw the Indian rupee continue to weaken against the US dollar this week and closed Friday at 70.50. The RBI held Indian rates steady at 6.5%. The 10-year Indian government bond increased 4 basis points to 7.46%. The spread between long-term and short-term bond yield, both in the U.S. and India, are narrowing. So this is from indicators perspective, this is a signs of a recession if we compare them to 2008 and today. But it's a pretty bad news, little bit better news for the U.S. versus India. The fixed income benchmark bond market is in the red, and 1-year Treasury closed Friday at 2.6%, 2-year at 2.72%, and 10-year at 2.85%, and 30-year around 3.14%. Mostly all Treasury are trading low this week. LIBOR overnight borrowing is 2.18%, 1 year is 3.1%. U.S. Treasuries yield slightly on the 10-year benchmark to 2.9%. The 10-year mortgage rate dropped slightly to 4.66%.
So let's talk about the equity markets. U.S. equity markets had a wild ride this week. There were lots of gyrations, up on trade talks, then down, then up again, and then down. The Dow has been all over the place. Down 800 points, then back up. Almost breaking even and on one day, and then overall the U.S. economy still seems strong, but the two major issues that are causing these market palpitations are the trade war with China and interest rates. Though the Fed seems to be softening their stance on how aggressively they plan to raise rates, I think we all agree that rates will continue to rise in 2019. And that's keeping the U.S. economy from overheating. And coming back to what I was talking about, wage growth, I think that's going to be an important number that the Fed is going to be watching and seeing how much are wages increasing. And if they start seeing average wages increasing too fast, it might be a sign that they're going to start getting a little bit more aggressive about raising interest rates. Trade is a whole different issue. No one really knows where this is going. But with the arrest of the Huawei's CFO, I don't expect China to be in a mood to placate the Trump administration anytime soon. This could result in a prolonged trade war that is going to seriously affect U.S. consumers and the cost of goods that U.S. consumers are purchasing.
Absolutely. Earlier today, I read an article that both Target and Walmart were thinking about raising prices in China. So you can see it's hitting the retailers. If it's hitting the retailers, it's going to affect the consumers at the end.
Yeah, absolutely. Well, we all know that the Dow and NASDAQ and S&P had a horrible week, so let's not go into too much details on those numbers. It's been a tough week for U.S. equities. But, how about we talk a little bit about what's going on in India?
So in India, the Sensex, it was up 361 points on Friday, but went down 1.37%. So it kind of, strengthened on Friday, but obviously for the week it was down. And Nifty was also up 92 points on Friday, but for the week it's down 1.68%. So I think the global news, we live in a globalized world, and every single piece of news is affecting. And whatever happens one part of the world, actually it has an effect on the other part of the world. So obviously the trade war, the interest rate, like you said, are the leading indicators.
Yeah. Harjit, for our U.S. listeners, would you mind giving them, for those that aren't familiar with the Indian markets, maybe an analogy between, we typically look at the Dow, the S&P. What are the analogous indices that we'll be watching in India?
So, and just like we have Dow is the weighted average of 30 stocks in India, we have Sensex, which is obviously 30 companies, and then we have NSE, the National Stock Exchange, which has a tracking average of top 50 companies. But in terms of, you have to understand, the National Stock Exchange is bigger than the Bombay Stock Exchange, which is obviously a lot older in terms of its history.
And the National Stock Exchange is a primarily electronic exchange, similar to the NASDAQ, whereas the Bombay Stock Exchange is a much older traditional exchange that has, of course, modernized and become electronic over the last, 20 years or so. But the Bombay Stock Exchange is the largest exchange in India now. Whereas I remember 20 years ago, we had a lot of local exchanges. There was an exchange in Delhi, there was an exchange in Calcutta. Each of these cities had their own stock exchanges, and then the Bombay Stock Exchange and eventually the NSE just kind of like pushed them all behind, right?
Absolutely. It's funny, but you really need to understand India, how it operates. I think you still have different exchanges, but they just have hubs, so to speak, right?
Yeah. Well, let's shift gears a little bit and talk about venture capital. There's some big news in the U.S. this week. You want to share with our listeners?
This is the news that every single investors of both Uber and Lyft have been waiting for years. The first one was if Lyft beat Uber to the finish line, that they filed all their prospectus with the SEC. We see them going public in first quarter of 2019. We don't know who their lead broker is, but for Uber, bankers believe they can go public at about $120 billion valuation. Uber did not engage anyone, but Morgan Stanley helped them prepare prospectus filed with SEC on Friday. So we know who they're leaning towards. But PJ, I would like to, I was reading about this. See, their revenue is about $2.7 billion, and they're losing about $1.1 billion, meaning going public at $120 billion valuation, really?
Yeah, look, that's a pretty steep premium that people are going to be expected to pay for a company that has really revolutionized the way transportation happens in many parts of the world. But is it really growing as fast as people thought it was? Is the revenue as large as, and is the total addressable market as large as people thought? A 50x premium is a lot for retail investors to swallow. So, it's going to be interesting to see what happens. I think, watching the stock market over the next couple of weeks and next couple of months is going to be really important. If we continue to see the volatility that we're seeing right now, if we continue to see tech getting hammered in the stock market, I think it's going to be a tough market for both Lyft and Uber to IPO in, as well as any other companies that are planning to IPO in 2019. So I think this is going to be a really important couple of months for the IPO window in 2019. So
coming back, when Facebook went public, and obviously the story, right? It was supposed to open up really high, but then in a year and a half, it went down almost 50% before they fine-tuned their business plan. Do you see that happening with Uber?
Yeah, it's tough to say, but if they're pricing it at a $120 billion valuation, and then the stock market and overall the economy isn't as strong as it might have been in, let's say, 2015 or 2016 or even 2017, I would probably expect the stock price to drop. How much? Who knows? But I think that would be a difficult valuation to sustain. On the flip side, if we see, the volatility and craziness that we're seeing in the stock market subside, if we start to see the Trump administration and China making headway on coming to a resolution on all these trade issues, then we could see it go even higher. I think there's people chase yield, right? And if people believe that there is an opportunity here for the $120 billion valuation to go to $250 billion in 2 years or 3 years or 4 years, I think people will jump in and buy the stock. But they need the support of the broader market, broader economy to help that valuation go where it needs to go. Of course, the micro of the business is going to be just as important. How the business is doing, whether the business is growing and scaling, are they facing legal trouble in new markets that they want to enter? All of those things, of course, are going to have the larger impact on the price of the stock. But I think broader macro issues are also going to play a factor.
Excellent. Why don't you go ahead and give us other, top new venture capital news coming out of the U.S.?
Yeah. So this is actually India, but E&Y released an interesting report detailing the private equity and venture capital deals in 2018. They estimated $27 billion has been invested in India from January through November of this year. That's huge. $27 billion. It's higher than $26 billion record in 2017. In November of 2018 itself, E&Y estimated about $1.6 billion being invested, which is about 33% lower than November 2017 and almost 50% lower than October of 2018. So that, kind of shows that there were fewer larger deals taking place in November. But I think a lot of that has to do with the Diwali holiday season in India. It's like Christmas over here. 2 weeks before Diwali, people kind of check out, and people are more interested in spending time with family and celebrating and this and that, traveling. And it takes about a week, 10 days for people to get over the holiday. So I think, that probably has a lot to do with it. Diwali was a little late this year in November. So, that probably had something to do with fewer deals getting done. But, I think after January, we're going to start seeing more interesting things happening in India. We also see in the report that startup investing increased substantially in 2018, and they expect about $4.1 billion being deployed so far this year. That's 17% higher than 2017. And I'm sure a lot of that has to do with Walmart acquisition of Flipkart. A lot of people made a lot of money in that acquisition, both VCs and angel investors. But more importantly, the employees who had stock options made a lot of money. And I'm sure we're going to start seeing more and more of those people deploying capital back into Indian startups going forward. So, I think overall, I expect 2019 to be a very positive year for Indian startups. Tiger Global, which is the largest investor, or was the largest investor in Flipkart until SoftBank came along, made a tidy profit, and they've started getting very active in India again. SoftBank, we know, has been very active in India, and SoftBank's been very active everywhere with the fund. So since we're talking about SoftBank, let's talk about another SoftBank company. Singapore's Grab invested $100 million into India's Oyo rooms this week as part of their Series A, which SoftBank had led. And, again, on the topic of SoftBank, the former managing director of Facebook India, Kirtika Reddy, she joined SoftBank as a venture partner based out of their San Carlos office. From what I've read so far, it doesn't. I'm not 100% sure how much she's going to be focusing on India, but getting her to come on board, I think that's a a very positive signal about what SoftBank has in mind for investments in India.
So I think obviously, SoftBank is a big investor into Paytm, right?
Yeah.
So if this is a SoftBank company, I think India is on their radar, and they're looking at a lot of deals into the Indian ecosystem. And obviously, you and I always speak about investing in India. Is it to invest in already established family office type of companies, or these venture-backed companies? I think from a due diligence perspective, these type of companies are easy to invest into versus already family office type of settings. I don't know, how you feel, but I always felt the investors feel more comfortable with that type of backing and easier due diligence process and able to invest giant amount of capital. And we already seen with the Walmart, you reported the Walmart acquisition of Flipkart. So I think that's another positive news. Obviously, she's Indian, and in order to track Silicon Valley to invest into the Indian version of the Silicon Valley type of companies, I think SoftBank will always be interested.
Yeah, no, I agree. I think investing in family-owned businesses, particularly in markets like India, is very difficult for professional investors and foreign investors. And the tech sector has evolved significantly, where you have more professional investors coming in. You have standardized practices. You have standardized deal documents. So due diligence does become significantly easier. And I think that because of the way tech has been growing, even in India, the government has been putting a lot of emphasis on building innovation centers across the country. Both the central government and at the state government levels. The Modi government, I think it was in 2016, came up with an initiative called the Smart City Initiative. So they're trying to build more cities in India, and a lot of them are going to be powered by technology that's being developed indigenously in India. So, I think all of these things put together are going to make India a far more attractive place for technology innovation and capital deployment than it has been in the past. 2018 has been a fantastic year for Indian startups, and I think 2019 is going to continue to be more of the same. In line with that, there was an interesting report that I read, and this is a rumor, and it's not confirmed yet, but there's a rumor that Berkshire Hathaway is considering investing $4 to $6 billion in India's Kotak Mahindra Bank. If it's true, that's an interesting investment, considering that their last investment was in 197, which is the parent company of Paytm, the leading online payments platform in India. Somebody like Berkshire Hathaway putting $4 to $6 billion to work in a bank in India is, I think it's significant validation of the Indian market.
So I totally agree with you. Look, investors like Warren Buffett. So this is going back to our point earlier, they're going into more structured opportunities where they're not investing into family office type of settings, like I told you, right? I think that probably is one of the biggest disadvantages in India. But because these companies like Paytms are able to grow and they have a stable business model, look, India only has 1.3 billion people and probably one of the largest middle class, and is going to grow. So I think Warren Buffett does see that as an opportunity. He also has an investment in Paytm, so he's further validating and probably sending signal across the globe that come to India, invest in this economy. I think India does need a lot more investment. I think India, there's going to be at least, and I was here listening to Vijay Shekhar Sharma, the founder of Paytm, a few days ago at a conference in Delhi, and he clearly said, look, there's going to be at least $3 to $4 trillion coming out of the Indian economy in terms of the growth of the Indian economy. So we're going to see a lot of millionaires, billionaires, but obviously India needs a lot of investment. I think investors like Warren Buffett, SoftBank, and obviously Tiger Global earlier, when they were one of the earlier investors into India, I think further validates their point and their strategy.
No, absolutely. I think what you said is absolutely right, and it's not just the U.S. investors that have been going into India, but the Chinese and Japanese investors have been investing lots and lots of money over the last couple of years into India. We've seen smaller funds as well as larger funds deploy lots of money. Whether it's um, uh, SoftBank out of Japan, or whether it is uh, Foxconn and some of the other Chinese internet players deploying lots and lots of money in China. But we're also seeing it from Singapore. Temasek bought a Indian venture debt fund called Innoven Capital a couple of years ago, and just recently Innoven invested 55 crores or $8 million into Quicker as venture debt. Venture debt is still a relatively new space in India, but it's growing rapidly. And we're seeing a couple of venture debt funds investing very, very actively alongside a lot of marquee investors, Series A, Series B, Series C investors in India. So, I think this is overall an interesting space for foreign investors to look at, right? They're investing, they're getting the types of returns that venture capital provides, but they're getting a little bit of the safety that debt provides. So it's a nice way to dip their toes into the market. And for founders, venture debt is fantastic. You don't have to give up a ton of equity to get working capital. Selling equity for working capital it's an expensive proposition. So this is a great alternative for them. And coming quicker, the online classifieds marketplace has raised over $150 million from marquee investors like Omidyar, Norwest, and Warburg Pincus. So Temasek also coming in through Innoven, I think is a great idea. Now at the early stage, we saw InfoEdge lead a $2 million round in ShopKirana. ShopKirana is a company that's targeting traditional mom and pop stores and enabling B2B commerce directly between brands and local retailers. I want to congratulate the founders. I met them 2.5, 3 years ago. And it's great to see that they've really built this business out and attracted some really, really smart investors to come in. Another founder that I want to congratulate is Ravi Teja Doda, the co-founder of Mogage. I met Ravi Tej in 2011, and they just closed a $9 million round led by Matrix Partners. Another great company to add to my anti-portfolio. So, some interesting companies at the early stage continuing to raise money. And not all of it is small amounts. A Series A in India is still relatively smaller compared to the US. But, there are more Series A deals happening. But there's also some negative things happening. And some of the negative things that we're seeing is on the crypto and blockchain side. And again, this is something that is not 100% confirmed, but the Indian press is all over it. Recently, and I think it was Friday, there was a leak from an anonymous source saying that a government panel has recommended to the finance ministry of India that all crypto should be considered illegal and new regulations should be passed that put the virtual currency space under the jurisdiction of the RBI. None of this has been confirmed, like I said, but it's a scary thought. I'd spoken to CNBC about this back in April when the RBI blocked banks from working with cryptocurrency businesses. If after signing the agreement at the G20 last weekend to promote blockchain technology and also stop the spread of illegal usage of cryptocurrency, it'd be extremely disappointing to see the Indian government take such a reactionary stance. Unfortunately, it wouldn't surprise me either, considering how the Indian government has dealt with things they don't completely understand, like angel investing in startups. There was a couple of years ago, they passed a law that essentially taxed angel investors or taxed the companies that received angel investment as income rather than as an investment. So, it took a lot of work from a lot of folks to kind of get the Indian government to see light of not keeping that law on the books. And eventually they got rid of it. But the Indian government has a tendency to do things that aren't necessarily in their long-term interest. Coming back to blockchain, there's only a limited amount of value that a consortium chain or a private blockchain can provide. They are useful, they are important, and I think a lot of businesses will start using them. But the companies that are building them, they're going to look for large markets, and unfortunately, it's going to take some time before you start seeing private and consortium chains businesses be large markets in India. Public chains, on the other hand, which is where most of the tokens and coins reside. Public chains they need the use of a coin or a token just because of the way blockchain works. And banning the use of coins and tokens in any way would result in more and more Indian startups that are focused on blockchain being forced to move overseas. I mean, that could result in brain drain 2.0.
This is definitely a concern because there are a lot of interest for cryptocurrency and blockchain in the startup, in the Indian ecosystem. You're telling those entrepreneurs and investors, go invest your money overseas, as we don't know how to deal with this issue, right?
Yeah.
I think one of the major reasons that India is able to grow is because of angel investors, early backing in companies, right? Not only you grow the economy, but look at the jobs, look at the population, look at the middle class, look at number of kids graduating from school. They need jobs, right? I think that early stage investment is kind of an area which kind of saved India in the last 10 years in terms of job growth, even though it hasn't met its target, because there's definitely a lot of people who are looking for opportunities. But I think when you're discouraging investors to not invest into a particular space, or you're saying, okay, we don't know how to deal with this, so we're not going to allow this, I think it's a bad way to look for it. But I personally think, they should hire or get advice from experts like yourself to see, how to implement the right regulations, or take a book out of the SEC, learn to regulate that industry. But you do have to allow investments, because I can see hundreds of thousands of jobs coming from this space.
Yeah, no, I agree. I mean, it's unfortunate, but the governments in general sometimes can be quite reactionary against things that they don't necessarily understand. And I understand that there is concern about money laundering and things like that. But cash is a great way to launder money also. So is gold, so are diamonds. Those aren't being banned anytime soon. So I agree. I think the governments should be spending more time with experts, really trying to understand the benefits and some of the dangers, and then trying to create laws that will protect against some of the dangers, and those that are not abiding by the laws will be punished when they're caught, right? So it's unfortunate, but hopefully this is just a rumor, and this suggestion by this panel won't be approved by the finance ministry. But in order to become law, Parliament has to pass a law. So that in itself could take some time and may not come to happen because next year's an election year. So we know politicians where they'll be focusing their attentions next year.
We hope so. I hope they don't. I hope this is a rumor as well. I hope the government definitely comes with the right way to regulate the industry, but encourage investors rather than discouraging entrepreneurs. But
yeah. I mean, there's a lot of money in the blockchain world and the crypto world that is looking for places to deploy. There and legitimate money, not illegitimate money. China, Japan, Korea, the US. There's a lot of people that are looking for interesting blockchain-related projects to invest in. And if India becomes unfriendly to crypto and blockchain, those investors are going to look at other places, and those founders that are in India are going to try to leave India and build their businesses outside of India, in which case India's going to lose out on not just technology, but also the foreign direct investment and potential taxes that business will generate. So, too bad.
Definitely a bad rumor, I hope. And there's better news coming from the government side. But I think I will give you an example. So I had a pleasure of speaking at a conference hosted by Andhra Pradesh government a few months ago by Chandrasekhar Babu Naidu here in the city. And see, they were encouraging companies. They came in like 8-city tour, Silicon Valley, New York, also in Tel Aviv. They were inviting 10 different type of technology companies who would like to grow into India, and they would like to invest in these companies, and they were investing a few $1 million. I think that's what, this is how the government should make entrepreneurs and investors' job easier rather than obviously creating obstacles.
Yeah, yeah, and it's interesting because here you have a state government, the state of Andhra Pradesh, that is promoting uh, the use of blockchain technology and wants to invest in companies that are building blockchain technology solutions. And at the same time, you have potentially the central government or the federal government in India considering a ban on cryptocurrencies. So, the two are kind of doing this, right? They're not really aligning, which will be interesting to see what happens. Um, yeah. So I guess with that we can wrap it up. Unless you have anything else you want to add, Harjit.
No, that's it. We're looking forward to 2019. It's going to be an exciting year. And we'll bring our next podcast next Friday at 4:30. You can reach me at Harjit, HARJITRATHORE, Harjit Rathore on. You can tweet me anytime. Thank you.
And for everyone that is watching this podcast, we'd love to hear from you. Fill in comments, tweet us, whatever. You can reach me on Twitter at PJAIN. So looking forward to connecting with all of you and hearing your thoughts. Thanks a lot for listening.
Thank you.